What's going on, everybody? It's June 18th, Thursday. Today I took a few trades, ended up green, so I'm finishing green on the week versus last week when I got whooped on. The trade that I'm going to go over today is the Tesla puts trade that I took for 42%. This is the type of look I am looking for every single time that I come to the market. Very simple. I'm not trying to complicate things. I'm looking for a break of a key level, a pullback to a key level, and then continuation with the initial trend. That's all I'm looking for. I'm not trying to recreate the wheel. What I'm looking for is very boring, but it keeps me on my toes because I'm only looking for the one thing. Let me show you.
Right after the opening bell, Tesla breaks the previous day low. That's the first thing that got my attention because the previous day low is a super key level that a lot of traders are watching. So when price starts trading below yesterday's low of day, sellers are showing they're willing to accept lower prices. So immediately I'm thinking puts. Now, I wasn't sitting at my computer when the initial break happened, so I didn't take the first move, but my thesis was already there. If Tesla pulls back into an area of resistance, I'm going to be looking for an entry on puts. So as the market settled down, Tesla started pulling back towards VWAP. VWAP is simply one of those indicators I use for confluence. I don't use it all by itself, but after a breakdown, it can act like a super resistant level. So now I have two things lining up. Tesla lost the previous day low, that's one, and now it's pulling back in to VWAP. This is perfect. This is the part that really gave me the confidence in taking the trade though, because the volume is starting to line up. Most traders only look at the candles. I look at the volume behind them too. This green candle here was actually a larger candle, but the volume behind it did not impress me at all. Then the next candle formed near VWAP and volume actually increased, but price wasn't pushing through VWAP. Instead, price was stalling and starting to reject at this area. So what that told me was sellers were still participating, buyers were putting in the effort, but they weren't getting too much result right here. And when you see increasing volume with price failing to reclaim an important area. So once I saw that rejection forming at VWAP, I entered puts. My stop loss was right here above the recent swing high because if price could break above that level and reclaim obviously the VWAP that I was using as resistance, I'm out the trade. That proves that my thesis is wrong. That's important because before I enter a trade, I know exactly where I'm going to be wrong and where I'm going to take my L. My initial target is always going to be 1-to-1 risk to reward. Once that target gets hit, I can reduce risk and let the trade work. After that, my next target was low of day because that's where sellers has shown strength. Obviously, early in the session, you can see low of day is created and boom, it bounces up from there. So this is where I'm looking to take my full trade off the table. So the trade wasn't just I bought puts, it was previous day low breaking. Number two, a pull back into VWAP. Number three, price rejecting VWAP, which was resistance in this case. Number four, volume confirming sellers were still active. And of course, the most important things, a defined stop loss and a clear target prior to even clicking to get into the trade. That's what I'm looking for every day. The money is the result. The process, that is the 100% edge.